Most traders start with free indicators, RSI, MACD, moving averages. They look simple, they sound logical, and they're free. But here's the question. Can these indicators actually compete with advanced tools like SwiftAlgo, which uses real-time AI optimization and backtesting? We're not guessing. In this video, we'll test them side by side and reveal the truth. Can free indicators really make you profitable, or are they just holding you back? Let's get straight into it. Everyone starts with RSI or MACD. That's how most of us learned. They're easy to understand, and they look like they work. The problem? They were built 30 to 40 years ago for slower, simpler markets. But today's market is different. You've got high volatility, fake breakouts, and algorithmic bots running the show. And while free indicators are static and lag behind price action, tools like SwiftAlgo constantly adapt, reading volatility, volume, and trend strength in real time. So to keep this fair, I decided to test them all on the same conditions. We're using the gold 15-minute chart over the last 3 months, a perfect mix of volatility and structure. We'll test 3 setups. RSI buy when RSI drops below 30, sell when it rises above 70. Risk to reward, variable. MACD buy when the MACD line crosses above the signal line, sell when it crosses below. Risk to reward, variable. SwiftAlgo, buy and sell signals automatically generated by AI. Risk to reward, 1 to 2 built in. No custom changes, no tweaking between trades. Everything is tested objectively under identical conditions. Let's start with RSI. In theory, it's great. Buy when the market's oversold, sell when it's overbought. But in practice, over the last 3 months on gold, RSI triggered 49 trades with 63% win rate, which resulted in total P&L of minus 0.03%, which is very bad considering you would trade for 3 months and would only lose money. Key issue was RSI gave signals too early, took profits way before the move was over, which you can see here perfectly. But to my surprise, RSI did pretty good, trading in ranging markets. Now, let's check MACD. Classic crossover system. Clean, simple. But here's what happened. Over the same 3-month period, it triggered a crazy 485 trades with 32% win rate, but total P&L was better than RSI plus 0.01%, which is still break even, so no massive success. Key issue with MACD were super false and spammy signals. MACD was literally entering trades every 30 minutes, and now SwiftAlgo. Same chart, same period, 15-minute gold. It triggered 14 trades, fewer than RSI or MACD, but win rate was 61% and P&L incredible 13%. Key difference is the signals appeared right when reversals began, with trend confirmation and built-in stop-loss/TP zones. So what does that tell us? Free indicators give you more noise. SwiftAlgo gives you fewer trades but higher precision. You're not reacting late. You're acting on data that adapts as the market moves. Let's break down why SwiftAlgo consistently performs better. Instead of fixed formulas like RSI or MACD, SwiftAlgo analyzes volatility and recalibrates signals live. That means it filters out weak setups that would have triggered false trades. Unlike free tools, SwiftAlgo doesn't just tell you when to trade, it tells you how. It instantly calculates stop-loss and take-profit targets based on structure and volatility. And on top of that, SwiftAlgo gives you multi-time frame trend dashboard for confirming entry. The backtest was done on signals alone, but if you would use this dashboard, the final win rate would probably jump from 61% to like 80-ish%, since you would be able to avoid signals that were generated in not ideal conditions. Here's a simple side-by-side example. On gold, 15-minute chart. RSI drops below 30, tells you buy. But the market keeps dropping another 100 points before it turns. You get stopped out. Now look at the same move on SwiftAlgo. The buy signal was generated at the perfect moment when the price really started reversing. The trade hit a 1 to 2 RR target in a few hours. No false signals, no nonsense. And the same happens on bearish setups. SwiftAlgo doesn't guess. It reacts to confirmed structure and momentum. Free indicators aren't useless. They're just outdated. They're great if you're learning market concepts like trend, momentum, or exhaustion, but they weren't designed for modern volatility, news spikes, or algorithmic behavior. SwiftAlgo was built for exactly that, combining institutional-level logic with retail simplicity. It gives you real-time structure, trend, and signal data in one clean system. That's why thousands of traders are switching, not because it's flashy, but because it actually works. So here's the truth. If you want to stay stuck guessing with delayed tools, free indicators are fine. But if you're ready to trade with clarity and data that adapts with the market, try SwiftAlgo. The link is in the description below. And if you enjoyed this video, make sure to leave thumbs up and subscribe for more trading videos just like this.